Our next guest says that generative AI adoption also driving some spend. Question is, will it be enough to help tech in this environment? The CEO of PagerDuty, Jennifer Tejada, joins us on set finally to discuss what she's hearing from her company's customers. It's great to have you back in the building, Jennifer.
Great to be back, Carl. Thanks so much for having me.
We were just having a discussion. It was about buybacks, actually, and how rising rates are making it more difficult to spend money on things like that. For a while there, it was because they were scrambling to spend on AI.
Yeah.
So is it starting to erode some of these other priorities for corporates?
Well, look, it is a difficult market. You know, we've seen a lot of volatility in the macro environment, political uncertainty, and I think customers continue to be really thoughtful and cautious on where they're making investments. But they're still making investments in essential areas that help them grow their revenue, help them improve efficiency and productivity. Generative AI is a big part of that. Help them reduce the risk and cost of material operational failures, which become more and more challenging as these companies transition to being truly digital businesses. And, you know, we're also seeing customers adopt automation more readily. You know, that was something that I think people historically, employees, were even afraid of. Would automation replace me? But now we're seeing employees be much more open to adopting automation as a way to improve their own productivity, to drive efficiency for their teams and for their companies.
Has it changed the way you frame a sales pitch or your pricing or your argument to bring in new business?
We have definitely kind of up-leveled the conversation to the CIO, the CISO, the CTO, really around how do you protect value? How do you protect and grow your revenue? How do you reduce your operating costs and do that in a highly quantifiable way with things like lower cost of ownership, total cost of ownership over time, and quick time to value. We don't have customers that want to wait 5 years to see a value proposition play out. They want solutions that are easy to deploy, don't require a lot of systems integration and extra cost hanging around them, don't require a lot of administration and maintenance. And again, like that appetite, that increased appetite for automation is there because their teams need to do more with less. I mean, everybody is sort of in this race to figure out how to make generative AI work both within their business from a productivity standpoint, but also in their products and services. And so, you know, there is a little bit of an arms race going on there, and that requires investment. So you're looking in other places in your budget to find that capacity.
What is it that you're offering them on the generative AI product and services front?
It's a great question. So AI has been part of our platform for almost a decade. We released a number of generative AI features over the last year that really serve as sort of co-pilot agents to help our operations teams do their work faster, whether it's drafting a post-mortem report after an incident so you learn from it faster and prevent it from happening again, or automating the process of self-healing, rolling out a run book without the need for employees to get involved in that process. So what we're doing is automating more and more of the value chain associated with what can be very costly, reputationally damaging incidents. And the more we can automate that, the more we return, you know, these knowledge workers back to innovating and building products and services that their customers care about.
I mean, we hear about this growing market for AI and preventing hacks and everything. What do you think is going on with your stock, though? I know a recent downgrade said it's in the penalty box. What are you hearing from investors there?
Well, I think investors want us to be super optimistic about an economic environment that is uncertain. And, you know, we've chosen to be prudent. We continue to control the controllables. I mean, since we went public, we've nearly tripled revenue, improved operating margins by 35 points. We posted a strong growth and profitable quarter. And we're focused long-term on durable growth. Long-term, I remain very optimistic about the market. I was with 100+ CEOs at Fortune CEO Initiative conference yesterday. And you know what I see is everybody grappling with the challenge of wanting to embrace generative AI, but needing to figure out how to do it responsibly. I think it's Amara's law that tells us that we usually overestimate the short-term impact of new technology, but underestimate the long-term effect. And I think that's really where we are in this hype cycle. But what I was really encouraged by is every one of our large enterprise customers, and we're in over 70% of the Fortune 100 and over half of the Fortune 500, is trying to figure out how to innovate faster, do more with less, and automation is critical to them.